Hello, I'm David Hunt, CEO and founder of Hyperion Executive Search and your host for the Leading Cleantech podcast. Welcome to the last episode of the year. Joined by a good friend of the show and a good friend of Hyperion's, Anton Arts from Set Ventures. Anton, it's good to have you with us.
Hi, David. Great to be on the show.
Cool. We were hoping to have a fellow VC, Petr Mekovic from Inland Capital, but we've had some technical issues. But Anton and I will have a good attempt to look at some of the year gone by, some of the challenges and some of the highlights, and then also give perhaps a few insights into what we can expect in the funding world coming into 2024. So maybe we can start, Anton, looking at what has been a great year in many respects, certainly from ourselves, but clearly challenging in a lot of ways, particularly in the second half. Perhaps you can start on a positive note and say some of the highlights for you and Set Ventures during 2023.
Absolutely, and certainly it's been a phenomenal year for Set. Certainly, I'd like to start with the fact that we launched our next fund, Set Fund 4, which is a 200 million euro fund that is targeting digital technologies for a carbon-free energy system.
Right.
And our fundraising is mostly completed. We have an expectation to have a final close in the first half of 2024, but it's been great to bring that fund together and to work with existing investors and new ones.
Yeah.
To accelerate our platform.
It's a good thing to be able to do that this year. And obviously, again, the fourth fund is fantastic. What's been the feedback of the LPs and your investors? Clearly, positive in the fact that the round is going to close soon, hopefully. But was there any sort of changes in opinions or in the ease of fundraising for your own point of view?
Well, I would say that that the broader theme around climate tech has continued to be popular, but I think there's a number of macroeconomic trends that have really made fundraising a lot more difficult than in prior years.
Yeah.
We think it's really important for us that we could bring not only a track record to the table, but also a very focused investment thesis, which is really rests on three pillars. First, we believe the world's going to change, and I think we're not the only one believing that, but we are fundamental believers in that as a really long-term trend. Secondly, we think there may be a little bit too much attention on what I would call miracle technologies that only exist at lab scale.
Yeah.
And we're basically pitching to put a lot more focus on scaling what we have, what's right in front of us, and taking technologies to the market through the right business models and applications, rather than solely focusing on technological research.
Right.
And thirdly, it's the element of digital. And we believe there is a value migration happening from the layer of physical assets to the control layer, the digital layer.
Yeah.
And at the end of the day, those who control energy flows, the timing, the location, the energy system, we believe will be the parties that will ultimately create the most value through digital technologies and data. And that's very focused investment thesis has helped us to get across a very clear message to our investors.
Right. Yeah, and there's certainly been some great work with both within your portfolio, I know, and also that we've worked with a number of people in that sort of digital grid balance and flexibility enablement space. And as you said, a lot more can be done through that digitalization and through business models as much as from a tech perspective. Picking up on something you touched on at the beginning, that one of the pillar one you mentioned was that the world is clearly going to change and is changing. I don't know if it fits into your thesis precisely, but just your general view on adaptation technologies and investments, because I had this conversation a few weeks back with Ulrich Seitz, I think you probably know from ex of Bevar Ventures, around this focus on adaptation as well as trying to solve the longer term issues, but dealing with the changes that are going to take place. Is that something that's on your horizon at all, or just outside of SET? What your thoughts are on raising this topic of adaptation as well as trying to actually make the long term changes we need to make?
I would characterize that domain as outside of our direct investments scope. And I think my broader perspective on the general environment and the fact that, of course, it's not only going positive in our market, but there's also things happening that either question the need for solutions or at least slow down the pace.
Yeah.
But to those who believe that signals some kind of change, I would argue that regardless of whether we're going fast or slow in any given year, the trend is very clearly in one direction. And occasionally I'm joking that the people who have any sort of doubt about what's going on in our market are really, like TV executives who were doubting the rise of the internet in 2005. It may take a few years, but the direction is unstoppable.
Yeah.
And I think that's a very clear conviction in our team.
That's interesting, actually, Anton. Thinking further through, because again, in the last few years, even when we had more buoyant times from early stage funding perspective, there was still always a bit of a gap with growth capital or growth equity and follow-on capital. And interestingly, this year I've seen the private equity firms, the more traditional private equity firms, coming into the space for some of the reasons you just touched on there. But how do you see that? Is that potentially a good exit strategy from a VC perspective, or do you see that private equity wanted to get more interested in the climate tech, clean tech space as a good thing for the industry as a whole?
Well, absolutely, and actually, I think it signals really two things. One is, venture capital is always investing in the future, but private equity is looking at the now.
Yeah,
and the fact that they're interested, I think, is a important proof point in to the fact that the companies we're building are real, their revenues are real, their customers are real. And private equity is picking up on that.
Yeah.
The other important trend is what I would say ESG and impact reporting are going mainstream.
Mm-hmm.
And I find it fascinating to see that impact reporting is moving from a back office task to something that's on the mind of a lot of entrepreneurs, and it is becoming a common language between investors active in different stages of company building and capital formation. And it's a common language that starts in the early phase when obviously impact is still imprecise and sometimes speculative. And as you move on, it becomes important to quantify it and to predict it. And we think that trend is a really important way for investors across asset classes to talk to each other.
Yep.
And it'll help streamline the path to access capital for companies. So in general, SFDR is playing a big role in that, and you can argue a lot about its incompleteness or sometimes inconsistencies.
Yeah,
but I think it's a very useful framework to make impact tangible, and we are seeing the effect of that.
Yeah. I guess looking more broadly than the financial markets, I should say, clearly see the direction of travel and have the confidence to invest, both the more higher risky VC market and as you say, the sort of more traditional PE markets. And of course, big institution investors are making some big bets and supporting those as LPs as well. But how have you seen, because this year we've had obviously a struggle from the EU to directly compete with or come up with a solution to counter the IRA in the US. And of course, we had a COP, which was, without going too much into detail, was kind of what was expected, mixed messages, but not really driving matters forward. So do you see that we're still dependent on policy and governments, or are we really now past the tipping point where the capital markets and the economics just purely drive what we're doing, and I see the policy as a nice to have and an accelerator rather than a sort of a cause for things to happen?
I think the reality is that in anything that touches on energy policy and geopolitical considerations play a role, and it's important to consider the role of government and to consider the role of policy. At the same time, we're investing in, as I said, markets that are real, that are not driven by subsidies, but that are driven by real economics. And the thought process behind government incentives, I think, is the right one to accelerate and to stimulate, but not to create. And I think certainly IRA is an important feature for certain businesses, but certainly for venture capital, we believe that investing in capital efficient businesses is a pillar of creating returns.
Yeah.
And those are the businesses that are least affected by this trend. So I'm not disputing that IRA has been effective as a policy instrument for certain U.S. businesses.
Yeah.
But at the same time, I think at what we focus on, how do we create an energy system of the future? We see that Europe is in the lead and continues to strengthen that lead. And it's a market where it's not necessarily about brute force innovation, but much more about finding the opportunities to integrate, to connect with users and customers, and where a lot of the innovation is more bottom up than top down.
Yeah.
And I think Europe, in all its diversity and difference between countries, is driving this through a number of initiatives. And we believe that the companies who thrive in this environment are uniquely positioned to also become global leaders in their respective areas of focus.
Yeah. No, there's certainly areas of both the energy and the mobility transitions where Europe is, as you say, certainly leading the way, which is great and enables us to export and for us, work with companies who are internationalizing and going the other way, I should say, to the US. Before we sort of look forward, Anton, just closing on, I say, the year, which has been overall positive, as we touched on, but obviously has had some challenging moments, particularly in the second half. Whilst your values and your pillars clearly won't have changed, has your approach to fundraising in the second half changed? And if so, how?
I would say that what we're seeing is still a very healthy venture capital market that has stabilized rather than turned down. Mm-hmm. I would say this has certainly led to a normalization of valuation expectations.
Yeah,
which always works both ways, right? In your new deals, you're looking for optimization of value. In your existing deals, you're looking for tangible proof that you've created real value. In our portfolio, over half of the companies raised fresh capital this year, some very large rounds, right, and at good conditions. At the same time, we see there's definitely a flight to quality. And that the bar is going up. So there is intense competition around a limited number of deals, and there is for other companies who may not have been able to show the progress that they anticipated, it's a bit more of a struggle.
Yeah.
We are trying to be careful and ambitious at the same time. which is sometimes reason for some good debate in our team about portfolio strategy and financing.
Yeah.
But overall, I continue to believe that climate tech is a market that's a little bit isolated from some of the broader trends in early stage financing that other sectors have experienced.
Yeah. Looking to move forward, you say you've raised this fund, and I've seen obviously you're growing your team. We can talk more about that in a moment. But again, looking at moving then into the year ahead, you've touched on the areas where your thesis sits with that digitalization within the energy space. But are there particular areas of technology and market sectors, business models that you see having the best chances next year for scaling?
Yeah, absolutely. I mean, the biggest trend, the biggest development, I would say, is the power of decentralization. Because everyone's aware of the stress on the grid and the fact that we just can't double it overnight. So a lot of the solutions will have to be built behind the meter.
Yeah.
And whether that is driven by consumers, businesses, or some form of energy hubs and communities. But decentralization is such a powerful trend. It means you're turning people into actors who can take control. You're giving them a path to cost savings, but also to various form of autonomy. Mm-hmm. And in a way, it's the magic four, right? It's EVs, it's solar, it's heat pumps, and it's batteries.
Yeah.
That drive all of this in a broad variety of combinations. And I think we've only seen the beginning of that in a very broad and general ways. And there are so many different business models in which you can see companies advancing that trend. And in a way, of course, it's also still in a phase where there isn't any clarity yet on which the winning business model will be.
Yeah.
So we're looking at this as a hugely interesting market with a lot of different initiatives and ideas, and they're not all competitive. A lot of them build on each other's strength, and we're seeing a very healthy ecosystem develop all the way from sort of the physical side of installation and implementation to the element of control and management of that infrastructure. So that's a key trend. The other important development is that energy prices, let's say the commodity energy prices, have certainly come down from 2021 and 22. But people have been alerted to the volatility and the risk in that, and have started to recognize that investing in renewable energy solutions means also investing in uncertainty reduction to increase your self-reliance.
Yeah.
And that in itself, other than strictly the economics and the cost picture, is also an important wake-up call for the power of renewable energy.
Yeah, mitigating the risk and the volatility, for sure.
Yeah. So, but you actually asked me, well, what are we going to invest in 2024, right? So let me highlight a couple of sectors that we believe are going to be super important. So first of all, we're seeing a lot of businesses that have some form of energy management systems, orchestration, smart charging. It's variations on a theme, and we think that will continue. An area we're particularly interested in is residential energy solutions. We've always been super interested in anything that touches on energy system flexibility. and optimization. A pet topic of mine that I've been looking for a while now, but would love to see more innovation is how do we make our digital infrastructure more energy efficient?
Yeah.
So it's energy efficient data centers, and it's making digital infrastructure more energy aware. And finally, certainly in the light of geopolitics, let's not forget about cybersecurity for critical infrastructure.
Yeah.
As we build out a super distributed energy system, the potential attack surfaces increase, and we believe there is a real opportunity for improving the security thereof.
Yeah, no, that's an important point there. So we talk about the resilience of the grid in terms of being able to, act and operate from an energy generation and distribution point of view, but actually resilience of the grid in itself from those sort of additional, twofold. You obviously have climate sort of conditions and wildfires and all these kinds of things which attack the grid, but we've seen a number of cases, I should say, on a cybersecurity level where it's also vulnerable to attack.
Absolutely. So that's sort of my wish list for 2024. We're excited about the future, and we see a ton of opportunity across Europe. So I'm going to sit under the Christmas trees for a couple of days, but come back to the office in January really hyped up.
Full of passion, absolutely, and it's been great to see your activities this year, and obviously the growth of your team. In closing, then perhaps just some broader tips for entrepreneurs who are looking at potentially raising in H1. Around some of the key critical things that you think they have to be able to present to a VC. We touched before kind of almost that traction is king, right? Or some kind of execution is king. But are there anything in particular that you think will be really fundamental if people are in a situation where they have to raise money at the early part of next year that they need to have as an entity, as a board, on what they're pitching?
What I'm looking for in a pitch is a very clear articulation of what problem are you solving. And we see a lot of pitch decks that still start with sort of 3-4 slides on, hey, there is an energy transition going on. And I think that's all too high level and too preaching to the converted. What I like to see is a very clear picture on what problem are you solving, and whose problem are you solving? Mm-hmm. Before people enter into, well, I'm doing ABC and this is why it's such a great technology. And that's focus on thinking in terms of problems. Yeah. Matching that with your solution, I feel is sometimes undervalued, and it's something that I challenge a lot of people on. Yeah. So my ultimate test is if you're able to articulate the problem and you're able to say whose problem it is. Yeah. Is that the problem they worry about? They lie awake on at night, and I think some of this is really sort of product market fit 101. Yeah. But sometimes when entrepreneurs are enthusiastic about their technology and about their solution, they forget that that's ultimately the only thing that counts. Yeah. So certainly want to encourage people to think about that really hard and make it tangible. Yeah. Because that's ultimately what you bring to the table. Yeah. No, it's almost like sometimes you do have to go back to basics, particularly when things are a little bit tougher. It's exactly that. What is the problem you solve? Who do you solve it for? And is the pain big enough for them to get, start writing checks for what it is that you do? So, the other sort of question that's often on my mind, and I don't think there is a single answer, but companies can pick different positions and markets move on this topic too. But it's the age-old question about, is it better to be a true specialist on one thing be best in class on a fairly narrow set of functionality, and then really scale that across a wide area of potential use cases or geographies? Or can you be an end-to-end solution provider that integrates a number of different aspects into a very complete solution? The old sort of Microsoft Office suite approach. It's not the individual solution that counts, but how well all of it works together. And I think strategically, it's super important that companies pick, either one of those two, but not both at the same time,
right,
because that leads to a conclusion that you're trying to be all things to all people. And it's often really hard to decide what not to do than what to do. And just this idea about narrowing your ambitions so you can be super focused in your execution, I think is something that we absolutely look for in the business plans that we get in.
It's interesting you say that. I mean, clearly from when I founded Hyperion 10 years ago, we were very focused on purely the clean tech sector. And obviously it wasn't always early and easy in those early years. And it's very tempting sometimes when you see some shiny things or some opportunities outside, but being laser focused on that and now hyper niching down even more into each of the sort of subcategories within clean tech. But I think you're right. I should say lots of companies often have the temptation to be all things to all men, and then you become nothing to anybody. And what's the analogy? I was quoted recently by another VC. If you chase two rabbits, you catch neither. It's good advice. You've got, hopefully a time to rest. Clearly, the team at SET is expanding in terms of reach. Where are people likely to see or to come across you in the team in the coming weeks? Of course, we will see you at, I'm sure, at Eco Summit. But in earlier than this, are there places where you'll be visible and where people can reach out to you or the team?
Yeah, we attended over 100 events last year, or actually, sorry, I'm already thinking in terms of 2024. So 100 events in 23. So it would be a very long list, but we're certainly trying to hit all the major events and contribute that to that as well by hosting our own series of networking dinners in major European cities. Please keep an eye on our LinkedIn and our website for the specifics. But we value the opportunity to meet face to face, and think that's a really important part of this business.
Absolutely. Yeah, no, we'll certainly share details on where to find you and where to find Set Ventures on the episode page for the podcast. It's great to have you with us again. And take a well-earned break and hopefully see you in Amsterdam or someplace else early in the new year. Thanks very much for joining us, Anton.
Yeah, and I thought I'd just give, in terms of team, a shout out to the fact that we are hiring in Hamburg, and looking for a talented and experienced investment analyst. So certainly, if you're listening to this recording and recognize yourself in that opportunity, take a look at our website.
For sure. No, happy to do that. And as you know, that's not something that falls in our category, but we're generally a great team of everybody that I've met from SET, and for knowing a number of the founders that you work with and how they rate you as a VC that brings much more than just capital to the table. So if you are interested in, as you say, reach out to Anton and help grow the team even bigger. But great to have you share those thoughts with you at the end of the year. Anton, happy Christmas and have a great break. And hopefully we'll see you very early in the new year.
Okay, fantastic. Great to be here. Thank you, David.